good Monday morning. It is September 28th, and we are live from Bloomberg's world headquarters here in New York. Now, it is not only Merger Monday, it is also Media Monday, and I'll be talking to Hearst Magazine's president, Kathy Black. She's a tour de force in magazine publishing. Now, Hearst owns O Magazine, Cosmo, Good Housekeeping, along with several other titles, what is working and what isn't in the publishing world. Plus, there's a prediction that we're heading into one of the coldest winters in years, and that has traders paying attention. We're going to have that story coming up. Okay, well, a week ago today, Dell pushed into the IT services space by acquiring Perot Systems. Well, this morning, Xerox made its own move, buying Affiliated Computer Services for $6.4 billion. And John Ehrlichman has been following that breaking news. John?
And we've seen both of those stocks very active in the pre-market. Betty, as you might expect, ACS shares soaring while Xerox is losing steam quickly. The transaction is a cash and stock one, $18.60 a share in cash. The rest of this in stock, which valued the ACS shares at around $63 this morning. The last time, by the way, that stock traded above $63, you got to go back to 2006, briefly above that level, which immediately raises these questions. Like in the Dell transaction, is Xerox paying too much? Couple that with the fact that some analysts recently were hoping we would see more aggressive stock buybacks by Xerox, and at an analyst day earlier this month, ACS not raising its guidance for 2010, and some concerned about the top-line growth story there. Still, this is a deal that will triple services sales for Xerox, something that Ursula Burns told us she's very excited about.
We think that in any times, tougher economic times and not, that responding to the cries of our customers is the best thing to do. And clearly, services, managing processes for our customers, information-based processes, is what we should be doing.
By the way, just a quick update on the one-year performance, Betty, of Xerox shares, still down about 20%, but they have rallied since the March lows, now up about 13% for 2009.
Okay, John, thank you. Another merger to tell you about. We have this $7 billion acquisition in the drug business, and Suzanne O'Halloran has those specifics from the big board. Suzanne.
Hi, Betty. That's right. Abbott Labs is paying a little over $7 billion for Belgium-based Solvay Pharmaceuticals. This will give Abbott the highly lucrative cholesterol drug Tricor. This is a $1 billion drug for the companies. The end goal of this deal is to gain full control of Tricor and also expand Abbott's presence in emerging markets. You can see investors like this deal. Abbott Labs, the shares are higher this morning, and it's also, Betty, giving investors pause and perhaps thinking there may be more drug deals, especially for those companies that have cholesterol drugs. AstraZeneca is a great example of that this morning. It's higher on speculation that Novartis could be interested in acquiring the company. AstraZeneca has the drug Crestor, and of course this is also a very, very lucrative drug for the company. So we may see drug stocks move higher today on that merger news. And what's also important is the deal that John just detailed about Xerox and this Abbott Labs deal. Very positive for the equity markets. We had a sell-off in Asian markets, but since we've heard these deals come forward this morning, we've seen a stabilization in the European markets and the U.S. markets. You can see U.S. stock futures are higher, and Andrew Pyle of Wealth Advisors says this morning in a note, they really add to the feeling that the gears of the capital markets are turning a little bit more freely. And as we know, this is very positive for the equity markets. Betty, back to you.
Okay, Suzanne, well, staying with stocks, traders expect volatility to rise over the next month, which could signal trouble ahead for equities. And Bloomberg's Adam Johnson explains that. Adam.
Yeah, hey, Betty. It's very simple. When volatility rises, stocks tend to fall, and when volatility falls, stocks tend to rise. Take a look at the relationship. We graphed it for you over the past several months, and you can see it pretty clearly. We've got volatility in orange, the S&P 500 in blue, and of course, as we just said, volatility has come down, as we all know, over the past several months, and certainly we also still know that the market has risen. What's also interesting, though, is look at the individual sort of pops in the VIX along the way. You see the VIX would have a little up move and then correct back down. Well, look what would happen to the market each time the VIX popped up. Obviously, the market took a little hit. That blue line would dip down. Well, look at what futures are now telling us about the VIX over the next few months. That's the dotted line. The traders effectively think that the VIX is going to rise. Might that be a signal, perhaps, that the market is going to come down? The volatility index is also called the fear index. It moved up about 2 points last week as the market started to trade down. It's now 25. The futures say it's going to 29 or 30. Again, that could mean the market's coming down. There have been a lot of strategists on our air talking about this. Barry Knapp, of course, of Barclays, and most recently, this morning, Tobias Lefkovich of Citicorp says that he sees the market trading down to about 1,000. That's 4% from here. He says we're out of the sweet spot at about 20 times trailing 12-month earnings, or 17.5 times this year. No matter how you slice it, we're a little high, and that's what they're talking about. Time for perhaps a correction, Betty.
Okay, Adam, thank you so much. Well, it's possible that full employment just isn't what it used to be. Since the mid-1990s, economists have figured that full employment was equivalent to about a 5% unemployment rate. Now, PIMCO CEO Mohamed El-Erian says the recession is driving that so-called natural rate even higher, perhaps to 7%. And El-Erian says it will take a couple of years for the jobless rate to fall to 7% from 9.7% now. Now, we're going to get, of course, the latest jobless figures from the government on Friday, the all-important jobs report. According to a Bloomberg survey of economists, the unemployment rate may rise to 9.8%. Meanwhile, though finding a job has become a whole lot harder, according to the New York Times, job seekers now outnumber openings 6-1. That is the worst ratio since the government began tracking open jobs in 2000, 6-1. Okay, well, Goldman Sachs, though, is hiring. The bank plans to hire up to 200 people as it expands its $800 billion asset management business. That is according to the Financial Times. The co-head of the unit tells the paper Goldman plans to make the division, quote, fully global. Now, Goldman's move comes at a time when rivals like Credit Suisse and Barclays have scaled back in asset management. And shifting gears a little bit, we want to bring you the latest in the Madoff case. Some of his family members may soon be sued. Bloomberg's Vera Gibbons has more on that, Vera.
That's right, Betty. In a 60 Minutes interview that aired last night, Irving Picard, the trustee overseeing the liquidation of Bernie Madoff's assets, and his deputy, David Sheehan, saying he plans to sue 4 family members, Madoff's 2 sons, Mark and Andrew, his brother Peter, his niece Shayna, all company insiders.
My belief is, yes, they knew. And the reason I believe that is they were officers of these companies and directors in certain instances as well. And also compliance officers in a very highly regulated environment. So I think clearly they would have to have known what was going on, given their own personal transactions, the longevity of what was happening, and their responsibilities as officers of the company.
Now, the lawsuit will accuse these 4 family members of breach of fiduciary duty and negligence, among other charges. Mr. Picard says that more than $150 million was either loaned, paid, or transferred to these 4 individuals, and he wants that money back.
Whether or not they have a criminal problem, we will pursue them as far as we can pursue them. And if that leads to bankrupting them, then that's what will happen.
Now, Mr. Picard and his lawyers have filed 13 suits, including one against Bernie Madoff's wife, Ruth. They are looking, of course, to recover about $15 billion for the thousands of victims involved in the $65 billion Ponzi scheme. Many of these victims, of course, lost their lifelong savings. Betty?
Okay, Vera. Well, accused scam artist Alan Stanford had to go to the hospital after getting into a fight in jail. Stanford's injuries, though, were described as minor. Now, Stanford has been in custody since being indicted in June. He's awaiting the trial, or he's awaiting trial on charges he swindled investors of $7 billion. A judge denied bail for Stanford earlier this year, and Stanford's lawyer says the fight is one more reason he wishes his client was out of jail. Let's also get you caught up on what's going on in the markets right now. Equity futures are higher on the back of all that M&A news with Abbott, as well as Xerox. S&P futures up by 0.4%. Dow futures higher by 33 points. For Treasuries, not doing a whole lot ahead of the jobs report this Friday. And I don't expect a whole lot of movement in the bond markets. 10-year note just down a little bit, and the 2-year is